Recorded.
Okay, hope that wasn't an echo I just heard. Right, okay, so I'm going to share my screen and have a look at initially starting off with the 3-line strategy, which is a basic Jeff Rubin's basic strategy, and then move on to something a little bit more advanced. So if you can see my screen, you can see fairly blank screen just with the candles on. And I'm just going to go through the process that I would normally go through just to get set up on the 3 lines. So I'll go through the method that you can use if you've got a free version of TradingView. So if you watch my cursor, I'm coming on to this left-hand panel here, going down to 1, 2, 3, 4, 5, 6, 7, where it actually says long position there, but if you click on the arrow next to it, it says prediction and measurement tools, and you get a drop-down menu, and the one at the bottom is a fixed range volume profile. So if I click on it, and you see those vertical dash lines with one there and this one there. That's the start and the end of yesterday's set trading session. So if I click on the first candle today, which is there, sorry, first candle yesterday, and the last candle yesterday, which is there, and you can see now I've got the fixed range volume profile for yesterday. So now we put on the 3 lines. The first line I put on is superimposed on that red line there, which is, I'll explain that in a second, I'll just put that on. Okay, just need to move that very slightly. I'll change the color, I like that one to the blue. Okay, so I'll just explain what the volume profile actually means to anybody who's fairly new to this. This blue area here is the range of price during yesterday's trading. So prices varied from that point at the bottom up to that point at the top. So that was the highest price yesterday, that was the lowest price yesterday. These bars here on the left-hand side represent the volume of trading at any given price within that range. So this price, which I've just marked off here, had the highest volume of trades during the entire trading session yesterday. And you'll notice that the bars on this area here are dark blue, and yet above there and below there are some smaller, paler bars. What that indicates is that 70% of all the orders that were placed yesterday were placed where the dark blue bars are. So from there up to there, 70% of all the trades yesterday. So what we do is we mark off that 70% area. We'll put a line at the top, and the third line goes down at the bottom there. Now, hold on 1 second. I'll just try and find out who was making that. Oh, it's actually stopped, okay. So that's our, what is known as a value area between that top blue line and the bottom blue line. That's the value area, that's the area that we're interested in today. What I'm going to do is I'm going to change those, the appearance of those lines. Okay, so that's a little bit easy to see now. Well, that's the area that we're interested in today. So that's yesterday's trading, where the blue box is. This is today's price. What we're looking at is this value area. And the theory is that if when you look at your chart, the price is within the value area, you then decide whether it's above the target, which is yesterday's POC. This is the target here. If it's above the target, then you look for sells down to that line. If it was below the target, you'll be looking for buys up to that line. I'll just put that on there. So just to point out that we're interested in yesterday's point of control, not today's point of control. One or two people have been asking me about today's point of control. The reason we don't work on today's point of control is that it's still developing. It started, well, we're sort of 8.5 hours in, or 9.5 hours into the trading day. So there's some way to go yet, and it may well move. So even if we had today's point of control, we wouldn't be relying on that for trades.
Richard, could I just ask a quick question, please?
Yeah, sure, of course you can.
Thanks. Morning, mate. Just if you've got a situation where it's outside the point of control, but you get a ninja down and everything is gearing up towards it being a buy or a sell, do you just leave it alone until it comes into the does it field of play?
Yeah, but when you say if it's outside the point of control, I assume you mean outside of that value area.
Yeah.
Yeah. Okay. So first of all, I'll mark the value area so it's a little bit clearer, and then I'll answer your question.
Thanks.
So put a rectangle on there. So that's highlighting the area of interest. That's what we call the field of play. Now, if I understand your question, you're asking if price is outside of that field of play, would we just leave it?
Yeah, if it's outside the field of play, and you know all the indicators, you've got your PSARs on your side, you've got the ninja down, you've got everything on your side. Apart from the fact that it's outside the field of play, what would your thoughts be?
Right. The first thoughts are that if we're looking purely at the three-line strategy, which is the basic strategy that we got from Jeff a few months ago, the answer to your question would be no. If it's outside that field of play, we leave it.
Yeah.
However, we've moved on since then, and the other aspects of the strategy that come into play. For instance, if we look at yesterday, this isn't the value area for yesterday, but let's assume it was. Once we got outside of the value area, there were still pips to be had, as you can see there. And in fact, I took some pips on that move there, which I was going to come to a little bit later. But yes, there is still, you can still take valid trades outside. However, what I would say is that for anybody who's new, I would suggest that you stick with only taking trades within that area. So it's a two-part answer, depending on your experience. If you're more experienced, then by all means, I'll come to the second part of the strategy in a minute. But
yeah,
if I was just teaching the three-line strategy, the answer would be only trade within that area.
Yeah. Okay.
And again, if we go back to yesterday, we were within that value area for quite a long time, and it touched the point of control, a couple of times before it started the display. So there would have been trades on yesterday's. I'm aware that this isn't yesterday's value area, but we'll just pretend it is for now. And so there are trades to be had within the value area. And I would say that the reason that Jeff initially started with this area was because they are actually safer trades. It's safer to trade within the value area than it is when it goes outside. So that's why I say it's for, particularly for new people, you should just get used to taking these trades within the value area. So come back to where we are now. This is today's price. We're looking at yesterday's point of control. We can see that within the value, we are currently within the value area and we're above it. So we should be looking for sells. Just as a matter of scale, if you look at the top, from the top of the value area down to the point of control, there's actually 47 pips to be had between there and there. And it looks like the area down to the bottom is a similar, 47 pips. So you've got quite a few pips to be had, even if you stay within that value area. I actually took up a few pips earlier this morning whilst I was waiting to come on, and I took a trade at that point there. As price came into the value area, I was about there when I took the sell, and I got out when it turned there. So I took a few pips. It wasn't massive, but I did take a few pips. And as you can see, it's now setting up to continue down to the point of control. If I put the matrix and the indicator on, let's just see whether this will still be a valid sell. So we've got a ninja down, the pink or the red background. We've got a ninja matrix down. We've also got a ninja down at that point. And the other thing that I look for is the moving averages. And you can see that the yellow moving average, which is the 5 moving average, is below the 13 moving average, which is this one that changes from green to red and red to green. So yeah, that's giving me all the signals that I would need to get into a trade. And I suspect it will go down to yesterday's point of control. And the thinking behind this strategy is that yesterday's point of control is acting like a magnet to price. And it's amazing if you do some back testing and see how many times price does go down to the point of control. And then, of course, you've got to decide, well, is it going to reject? Is it going to go back up, which it often does? Or is it going to break through and then go down to that point there? And although that trade from point of control down to the bottom of the value area wouldn't be part of the initial strategy, it's still a valid trade. So if you're getting all the indicators in the right place, lining up, it's a valid trade to take. So we've set up today's value area, today's point of control, and we just take the trades as and when the opportunity arises. You can see that price is actually starting to go up a little bit now. But I suspect that if we patiently wait, it will come down to the point of control. We'll see. We might see that happen whilst we're on this live. So that is how you would get set up for the 3-line strategy. I want to move on a little bit and show how I use the same strategy or variation of the strategy to take pips outside of that value area. So if I get rid of the matrix, get rid of the Ninjacator, I'll get rid of that and start off with a clean chart again. No, that's not what I intended to do. That's what I intended to do. So go back to a clean chart and just get rid of these. And move that out of the way. Right, so let's now assume that you've got a paid version of TradingView and life becomes slightly easier. So what we're looking at it for the volume profile, session volume, that's VPSV, as you can see there. If I turn that on, the first thing you'll notice is we've already got volume profile set up for multiple days. So this is what we just had on previously, but you can see that it's actually set up the volume profile for, I think you can go back a couple of weeks, actually, at least a couple of weeks. So we've got a lot more information now. And what we need to add to this is the value area. So this line here, this blue line, is yesterday's point of control. And we just need to mark on the value area high, value area low. Okay, and we'll extend that. So that's where we were a few minutes ago. And we had a little rectangle on there. So that's exactly where we were previously. Now, to follow on from your question, John, there are other areas that we could look at now. If I move you guys over there, I just... Right, so the additional information we've now got is outstanding points of control. And these are points of control from previous days, which have not been taken out yet. And these are of interest because sooner or later, these two lines here and these two lines here, in fact, there's a third one just off screen. There we go. So there are three outstanding POCs below today's or yesterday's, and there are two above. Now, my theory is that sooner or later, those POCs are going to have to be taken out. They're a bit like when Paul talks about imbalance, money left lying on the table. These lines act similarly, they act as magnets. And so if price strays outside this value area and it strays out above, you have to ask yourself, well, where's it going to go? And I would suggest that those two lines are two very important areas. Those two lines are what we call potential reversal zones. And as I say, I've marked 5 out. I've managed to find 5 that go back, well, these go back to November 2021. And these 1, 2, 3 go back to January of this year. Just as a matter of interest, there's also an area of interest, which is January's POC, which I've simply got by going back to the 1st of January and placing the volume profile from the 1st of January up until today and getting, there we go, it started there and it continued to there. In fact, I can do that now. If I start it at that line there and finish it that line there, you see that there's the point of control. Where are we? Actually, I need to move that. The average point of control since the 1st of January up until today has actually shifted since I drew that, and it's now up there. So let me just mark that off. I'm really trying something new here. I'm trying to work out whether January's point of control is of any significance. So I'll just put that there and get rid of that one. There we go. So this bottom line is the sort of average for the entire month of January. And we'll see how that plays out, whether it does become a significant line. Okay, so are there any questions about that before I go on to, I want to look at Mondays and Tuesdays trading opportunities.
Just a quick one, Richard. Sorry to interject again. So looking at those, the outstanding POCs that in balance either way of the zone. I don't know if you want to cover it in this one, if it's more advanced, but at what point would you sort of get in the trade to go for that potentially, or would you? I don't know.
Okay, well, yeah, I would simply use the checklist that I have a little checklist that I use when I'm trading within the 3 lines, but in actual fact, I apply the same checklist to when I'm entering trades outside the 3 lines. So I'll just run through those.
Yeah.
I think there is a version within the guides of this checklist, but I can go through it quite easily. I'll check the matrix off for a second. So if I was, so this applies to trades within the value area and also to trades outside the value area. I simply follow the checklist. So the first part of the checklist is the Ninja matrix, which shows here that these are green. This is a green area, and that's a very pale red area. But green for Ninja up and red for Ninja down. So we're currently in a red area, a red zone, and we've got a marker there which is Ninja down. Jeff often uses the phrase "trust the matrix." And I found that that rings very true when I'm trading. I find that if I'm in a red zone, even though this is a green candle, which seems to be going against the flow, we're still in a red zone. So I would, if I entered that trade early this morning and I'd seen it going back up again, well, I'm going to contradict myself, because I actually took that trade and I got out when it turned at that point. What I should have done, if I follow the theory, is I should have looked at the color of the matrix and said, well, it's still red, and therefore trust the matrix and stay in it. And only time will tell. But if this trade does eventually turn and go down, then that saying of Jeff's would have rung true. It does tend to work for me. If you're in a red zone, you've got a ninja down, and there are fluctuations in the price, just stick with the zone. If the zone remains in a red zone, it's telling you to sell, then I would say stay in the sell. So that's the first point in my checklist. Have we got a ninja up or a ninja down? Sorry, ninja matrix up or ninja matrix down? Okay, so we've got a ninja matrix down. So I put the ninjacator on, and what I'm looking for is a ninja down. So yes, we've got a ninja down here. So we had a ninja matrix down, we've got a ninja down, and so that's point number 2 in my checklist, the ninjacator. At this stage, I would change to Heikin Ashi candles, because the ninjacator was designed to work with Heikin Ashi. So you can see that that's altered the chart slightly. That's actually confirmed that there was a ninja down at the same time as the ninja matrix. I'll just shift that for a sec. There you got the ninja matrix down at that point, and you've also got a ninjacator at the same point. So 2 items on the checklist ticked off. And then the third point I look for is the moving averages. I've got 3 moving averages on my chart. You can choose whichever moving averages you want within the settings. You can change them. I've set mine to the yellow line, which is the 5 moving average, and the orange line, which is, you can't see it here because it's hidden by the red one, but you've got the orange one, which I've set as a 20 moving average, and the one in the middle here, which is the one that changes from red to green, that's already on. You've already got that on the basic settings of the indicator, and that's actually the 13 moving average. So we're looking at 5, 13, and 20. And coming to where price is now, what I can see is that the 5 moving average is below the 13 moving average, which happens to be red, which is a good sign. That's another box ticked. And I would say that you're actually in a good, because of that, you're in a good position to enter a trade. Let me just check where the PSAR. The PSAR is behind that red line as well. I just checked that the PSAR hasn't sort of found its way down to the bottom, which is contradictory. But everything's in the right place. You've got the Ninja down, Ninja Matrix down, the 5 MA below the 13 MA. And I think at some point in the near future, you'll find that the 13 and the 20 start to separate, and you'll find that the 20 is above the 13, which is above the 5. So that's my checklist. If everything's in my favor, then I would enter the trade. Just I wouldn't enter right at this second because price looks as if it might be. I would wait until I had a red candle there before I entered the trade. So does that answer your question, John?
Excuse me. Yes, it does. Thank you. Do you find that obviously with most trading, you get like the the break, retest, and then break, and then you offer the second break, you're in the trade. You find
Yeah,
that?
I tend to if you want a safer trade, and let's use this as this bit here as an example. In an ideal situation, I would look for at least this situation where on this candle here, there's a gap between the line and the candle. That would be my very least. I would want to see a candle close past the line. And the other thing that often happens is that price will come down and then go back up and retest that line and then start to come back down again. But I would certainly wait until the price had, until a candle had closed below the line before I would get into a trade.
Yeah. I know it's on the 15-minute as well, 15-minute time frame. I know Jeff usually on the 5-minute. Is there any sort of difference or preference?
I tend to flick between them, to be honest.
Yeah.
If I was, having said that, my boxes have all been ticked with Ninja Matrix down, Ninja down, 5 below the 13. I would take a quick look at the 5-minute and see what's happening there. So that's on the 5-minute. You can see there that's more or less what we've just been talking about. Price broke through. It came down, it went back up to retest. It didn't quite make it back up to line, but it seems to be generally going down. But again, I would wait. I would hesitate to get in until this situation got back in my favour. But looking at that, we've still got all the boxes ticked.
So if you were in on that first Ninja down, just near the gap, near the value area line.
Yeah.
So if you got in there, would you still be in the trade because the Ninja Matrix is showing red?
Yes, that's a theory that Jeff put out when he first started doing this, and it does tend to work. If you might find that sticking with the matrix keeps you on a little bit longer than you would have wished, because I mean, let's say that price continues to rise now, and the matrix changed to green. You get out at this point here. You actually lost a few pips because you could have been out at that point, or you could have been out down at this point here.
Yeah.
But in the theory holds that you still gain pips. You gain from that point down to that point. I'll go back. We're still on today, aren't we? We're looking at today on the 15-minute chat. Yeah, so that's today's situation. But I thought it might be interesting if you can bear with me sufficiently long enough to go through Monday and Tuesday, because the reason I want to do that is it sort of proves the point of the theory.
Yeah, right.
Okay, so let's take off the take off today's I'll get rid of that as well for now. Just that Monday and Tuesday presented some really classic examples of this strategy in action. So it'd be, I think it would be wrong not to use them in this session. Right, so go back to Monday. Go back to Monday. So that's Wednesday, that's Tuesday, that's Monday. Okay, so if we put the there we go. So that's Monday's POC. Take off the matrix, take off an indicator. So this is Monday the 24th. And so we would have been working off Fridays, wouldn't we? So if I put the fixed range volume on, this is Friday, and that's the end of Friday. Right, so this is Friday's session. And if we extended the okay. So this is Friday. This is Friday's point of control, and we're looking at Monday's trading. You can see, if I bring it out, that in the early hours of Monday, the price went down to the point of control. So it's unlikely I would have been in that trade because that was 1:15 UK time, but it proves the theory that price does return. It then went off on a wander. It went up to the edge of the value area. It went outside the value area, and then it came back. And then eventually it came back down again to the point of control. It went down to the bottom of the value area, and then back up to the point of control and back up to the edge of the value area. So there are multiple times when price there would have been valid trade. There was a valid trade there. There was a valid trade there. There was a valid trade back up there. So there's at least 3 instances where price did what the theory says it will do. I highlighted that one because that was a trade that I was in. This was sort of 1:45 p.m. On Monday. It went down. It went back up to retest that. Guess you'd call that a support and resistance, and then it went back down to the point of control. That was 63 pips. And if you'd had the courage to take the price back up again, you could have got another 63 pips on the way up. And this one where it touched, as I say, I wouldn't have been in the trade, but there was potential for a trade down, and for the brave ones amongst you, potential for the trade back up to the edge of the value area. And similarly, on Tuesday, just trying to work out where the point of control there was. There it is, there's a point of control. So this is the area we're looking at. So that was Friday. This is Monday. This is Monday's point of control. So looking at trades on Tuesday, again, we nearly came down to the point of control at sort of 2:45 in the morning, but there was another opportunity later in that morning. Price came down to the point of control. There was a good trade there. And then if you followed it, it went all the way down to the value area low. It's amazing how many times it's amazing how it respects those lines. Let's just put the Ninja Matrix on. So yes, we had a Ninja Matrix down and it stayed red all the way. Now, this is where you get into a discussion about whether to stay in the matrix. If you'd stayed in that trade following the matrix, you would have gained pips all the way down to there, but then you would have lost some pips when it went back up. If you stayed until it turned green, you would have got out at that point. So it's a matter of personal opinion whether you stay in or get out. Personally, what I would do with this, I would have been more than happy with that trade. And if I decided to stay in, I would certainly have got out at that point. I wouldn't have risked losing any pips on the way back up. So I guess it's a personal choice whether to stay in or not. And so yeah, we hit the point of control. We went down to the bottom value area. We went back up to the point of control. We went up to the value area again, and then it came down. It almost hit the point of control, and then there was a crazy move. In that, I did a post yesterday, and I said that there was a 100 pip move in one 15-minute candle. And that was because I'd sort of taken that measurement from the top there to the bottom of that green candle. That was 114 pips in one 15-minute candle. And I was so impressed with that. I simply posted that over 100 pips in one 15-minute candle. But I then started to go back down again, and I went down to a 5-minute. I should have marked that before. I went down to the 5-minute, and I noticed that it was actually that candle there where most of the action happened. It went up to there. Just measure that again from the top of that wick down to the start of the candle was 119 pips, and that was one 5-minute candle, not one 15-minute candle. But then I went down to 1 minute, and if I can find it again, I should have marked it. There we go. So there was actually, that's a 1 minute candle there, and that's a 1 minute candle there. So there was actually it was actually 4 1-minute candles that took it from that point just below the red line to the top of the wick there. So it was 109 pips in 3 or 4 minutes. Did anybody manage to catch any of that?
Unfortunately not.
Right, I was actually in that trade. I was expecting it to go up, but I entered the trade and I went to do something else, and I was away from the computer, and I suddenly saw. I turned and looked at the computer, and I saw that the price had gone way up there, and I just hit the get out button. I wasn't going to risk it turning on me. I got out. I actually took about 88 pips. Was it 88 or 82 pips? That was crazy. But if we go back to
could I just ask a question about that? It's Kathy.
hi, Kathy.
Would you do you always wait for the price to hit the POC before you take a trade in the opposite direction to the POC? Does that make sense?
Yes, yeah. So if for instance this candle here, which it has wicked almost out the POC, but not quite. I would. It's a difficult question to answer. I think to be honest, if I'm teaching the 3-line strategy, I've got to say yes. Wait until it hits the POC, because that is the strategy. Wait until it hits the POC. I would be tempted, I guess, if I saw it was a possibility I would be tempted to get, well, at least to get out of that trade and possibly re-enter when that makes a stronger move back up.
Yeah, that makes sense.
But the actual strategy would only be about taking the trade down to the POC. If you're taking the 3-line strategy totally literally, you only take trades to the POC. Although I've been doing this now for about 3 months, and I find that it is also feasible to take the opposite trade back up to the top of the value area. So I'm sorry to be a little bit complicated.
No, that makes sense.
I'm trying
maybe if I make the rule that it hits once it's hit the POC, it can go either way. So yeah.
Yes, that's the way to that's the way I would suggest you think about it. Wait till it hits the POC and then ask yourself the question: is it likely to reverse and go back up, or is it going to break through and go back down to the bottom line?
Yeah,
because
okay.
both of those situations are potential. But I would say once it's hit the POC, ask yourself a new set of questions. Which way is it going now?
Yeah, that's great. Thanks.
Okay, so
just further to that, Richard, do you take or do you set take profit levels and stop losses? Obviously, you take stop losses, but do you kind of just watch the trade as it's going? Is that how you do it?
Well, as I said last week, I tend not to sit and watch the trades. I tend to set them. Well, the first point is I try and avoid taking pending orders because I've been burnt quite a few times where if I've set a pending order, for instance, at that level there, and I said, right, I want it to, if I was selling, if I took a sell stop, I'm talking gibberish there. Let's say I was taking a sell stop, and no, let's say I was. Let me think how to explain this best. When I've taken sell stops and buy stops in the past, and I've set my price level, what I found is that quite often prices reach that level, but instead of continuing up in my direction, it's actually reversed, and it's taken me out. It's taken me back down to the stop loss. So my just personal opinion, I tend not to take pending orders. I tend to watch the trade until it reaches the point that I'm happy to get in. And then, yes, I do set stop losses, and yes, I do set take profits. So if I'll try and find an example. Had I I've moved the lines now, but let's say as a general principle, let's say I got into this trade when the ninja down. I think there was also a yes. There's a ninja matrix down, and there's also a ninja down at that candle there. Now, let's say I entered the trade at that point. I'll just try and make it a bit bigger. So this is just the theory. I'm entering a trade at that point, and I'm expecting price to go down to a particular point. Now, if I use yesterday's POC, that's I think we've moved that when I'm being messing about teaching, but if I entered that trade and I was confident it was going down to that line there, that would be my take profit. So let me, yeah, so my take profit would be here. In which case I would be into some drawdown at the minute. But the second part of your question was, what about stop loss? Well, my stop loss, I would generally place slightly above the PSAR. So my stop loss on that trade would be where they indicate where my finger, where that hand symbol is there. Can you see that?
Yeah.
So that would be my stop loss. This would be my take profit. And if I was at the screen, I'd possibly be getting a bit jittery now because it hasn't reached my take profit and it's starting to show signs of reversal. We've still got the ninja matrix down, but we've got an early entry ninja up, and we've got a ninja up at that point. So and the yellow MA is starting to turn. So I'd be getting a bit jittery now. I'd be thinking about getting out and taking the few pips profit that I've got, rather than having too much faith in the matrix. You watch it turn back down again and make a fool of me. But anyway, did I answer your question there?
Yeah, that's perfect. Thanks, thanks, Richard. Thank you.
Okay. Right, just about running out of time. I had one question this week which I wanted to cover, if you bear with me 1 second, and it was about how much is a pip worth, and because I found out an easy way to answer that, I thought I would share that with you. If I can get rid of this pesky Norton message. It's not going to allow me to do it. Anyway, I'll continue anyway.
We can see your screen okay, Richard, just to let you know.
Have you got the
economic calendar?
The message, yeah. So you can't see this message that I'm trying to get rid of, but just come
No.
from Milton? No? All right, okay.
No.
I'll try and work around that. So if you go to my FX book and you click on calculate, it's not letting me do it. Ah, there we go. You'll have seen the position size calculator that I've used in the past on these sessions. If you go past that and you get to this one here, pip calculator, click on pip calculator, and I was trying to find out how much a pip was worth when you were trading gold. So I trade in British pounds, and my lot size is, for instance, 1, and I ask it to calculate that, and I've still got messages in the middle of my screen blocking what I'm trying to show you, but hopefully you can see it. If you scroll down to XAU USD, which is there, I highlighted that, and I need to remember, well, those of you who were on last week, we talked about the trade size for gold needs to be adjusted to 0.01.
No, 1.
So I'll ask you to recalculate that and go back there. And you'll see that there's a value there in the right-hand column. So what that means is that 1 pip, when you're trading XAU USD, in other words, gold, 1 pip is currently worth £7.40. So 1 pip with a lot size of 1 is £7.40. And as you can see, you've got all the Forex pairs there as well. So you can do a similar calculation. The difference will be, as I say, with gold, you have to change from a lot size of 1 to a lot size of 0.01. I've never worked out why, but it works every time. So change your lot size to 0.01. If you were looking at just to confirm, let's say I was looking at GBP USD with a lot size of 1 pip. That's that one there. One pip happens to work out at £7.40, exactly the same value as 1 pip on gold. So because I had that thing in front of me blocking my screen, can anybody tell me, did I explain that well, or did I make a right mess of it?
No, that was really useful. I've never seen that screen before.
Yeah, there's so many different lots of information. If you go to my FX book, it's not just useful for the economic calendar. You can use it for, there's a number of calculators you can use. And also something I found the other day, which somebody might answer another question that somebody raised. Somebody was talking about broker spreads. So I checked this one here, brokers, and clicked on broker spreads, and it actually compares different brokers and their spreads, and there are dozens and dozens of brokers, and you can compare the spreads that they offer, which I thought was extremely useful. And you know, well, I'll get to a Forex. Let's fxtrading.com, which is a broker I've heard of. On Euro USD, they have a spread of 2.9. These are obviously typical spreads. In fact, that's changing. Look, it's changing as we look at it. It changed from 2.8 to 2.9 to 2.7. So it's obviously current. And so if you're looking for which broker offers the best spread on a pair that you're trading on, you know, if you've got a particular preference of pairs, just try and find out which broker's got the best spread. Anyway, that was just a by the by. That was something I found on MyFX. Look, there's lots of things you might want to check through. I've always used it just for the economic calendar, but there's obviously lots of other things as well. Right, so I'm slightly over time. I don't mind staying back to answer any questions if anybody's got any questions they'd like me to tackle.
What are your thoughts on leverage, Richard?
I tend not to worry too much about leverage. I've got a couple of different broker accounts, and I've also got a demo account, and I think I'm working on 100 to 1 on all of those 3 accounts, and I'm quite happy with that. I think somebody said if you get a leverage of 500 to 1, you're probably in dangerous territory. You're probably in danger of losing way too much. But I personally, I'm on 100 to 1, I believe. But again, you can ask your broker what leverage they're applying to your account, and if you're not happy with it, you can ask them to change it.
Yeah, thanks, Richard.
Okay. So, any more questions?
Yeah, could I just ask, Richard, how did you manage to grab so many pips during the day? What's your secret, mate?
I've only got one secret. And it's ever since I started trading one pair. I mean, I've been trading Forex for a long time, at least a couple of years, probably more. And I've been following Paul, I've been following Kevin, I've been following Rob and David and Brian Knight, and I even follow Barry Granville 3 times a week. And I've actually got my consistency since I started trading gold. And I only ever look at gold. I don't even look at any other pairs. And it's not because there's anything special about gold. It's because it's focused my attention. And there's absolutely nothing wrong. Don't get me wrong. There's nothing wrong with any of the other strategies that any of the other people are teaching. It just happens that this looks like being my niche.
I mean, it's just what suited you, and it's what you're managing to master more than the rest. I understand that. I get it. I mean, I was doing okay on gold a while back, but it kind of like reversed up on me. So I reverted back to normal Forex pairs, which I ended up, you know, off the harmonics and that, which I ended up doing a bit better on. But I am still tempted by gold occasionally.
Yeah. Well, I'm going to say it's not that there's anything special about gold. It's the fact that I'm absolutely focusing 100% on one pair. So I'm not looking at 20 different pairs in a day. I'm not trying to follow what's going on. I'm 100% focused on this. Having said that, the V70 strategy is about more than just trading gold. So what I've said to Paul is I'm going to try and develop my area of expertise into other indices as well, and try and do sessions, live sessions featuring other indices. So if I can just show you. When Jeff began this, began to teach the V70 strategy, he was looking at all of these. I think there are 12 there marked in turquoise. Yeah, 1, 2, 3, 4. Yeah, there are 12. So you've got gold, and at the top you've got silver, and then you've got NAS, SPX, US 30.
I mean, I've used a few of those, like oil and stuff, even the US 30 that I've done. And as you probably know, US 30 is quite wild. It can be quite erratic, you know, within, you can gain hell of a lot of pips within a very, very tiny move, but you can also lose a damn lot within a tiny move as well.
Yeah.
I've experienced it all.
Yes, I did briefly flirt with all of these indices before I decided to stick with the one. But as I say, I had a chat with Paul and said, if I'm going to be teaching the V70, I do need to broaden it out to more than just gold. So I'm working on sort of increasing my knowledge of these pairs as well. Not all of them all at the same time, but perhaps one at a time, to develop my knowledge and skill using these. So that's coming up in February. I'm going to start teaching a little bit wider.
Yeah. Anyway, thanks for all that, mate.
No problem, and thanks to everybody for jumping on. Anybody's got any questions, just fire them away on the Facebook group. And if anybody wants to look at this session again, it's in the Facebook group, but I also post it in, I've got a YouTube channel, so it'll be on YouTube later today. So thanks very much for jumping on.
Thanks, Richard.
Thanks, Richard. Thank you.
Thank you.
Cheers now.
Thanks, Richard.
Thanks now.